Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. So first I will be covering the technical side, then we will go and see what we have when it comes to the order flow. Now, starting here on the monthly time frame, what we can notice is that at the moment we're testing a very strong monthly resistance area. In fact, from here, the market created this move to the upside. So the previous move higher was started exactly from here. And at the moment we have broken below that zone and we are retesting it. Now, as you know, a previous level of support, once it gets broken to the downside, it becomes resistance. So here in the monthly, what we're actually testing here is the previous support now turn resistance. And from here, some short-term bearish price action could be expected for the market to reject this level. We can also notice how this movement is an impulse and this is a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market at the moment is testing exactly the 0.32 of the Fibonacci taken on this monthly impulse, which once again, as I said previously, is a very strong resistance zone. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market at the moment is testing exactly the previous high. Now, as we're testing the previous weekly high, there is a good probability here to see the market create a potential double top and reject lower. We can also notice how in creating this move to the upside, the market has also created this overextended W formation. And in general, after the creation of an overextended W, what you would like to see is for the market to create a move to the downside to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, if we take our Fibonacci from this low to this high, we can notice how the market hasn't retraced to the 0.32 yet. So there is definitely a possibility to see more bearish price action to develop for the market to go and retrace to this zone. If we drop down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I spoke about gold a couple of times in the past. I spoke about it after this move to the upside. From here, I made a full breakdown explaining all the reasons for which we could expect first a move to the downside and then more bullish continuation, which is in fact exactly what the market is currently giving us. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, what we can notice at the moment is that the market just created this W formation. And in general, after the creation of a W, what you would like to see is for the market to create a rejection lower to go and complete the W formation at the neckline, which is the previous resistance turn support here from a daily perspective. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, we can see how even though net positions have been increasing with the last reports, this is the first time since quite a lot of weeks that we see tens of thousands of longs getting closed, meaning that hedge funds are decreasing their exposure to the long for gold, meaning that they might expect as well a reversal away from this area. Otherwise, they would simply continue to add longs as they have been doing during all this move to the upside. So from here, there is definitely the possibility for the market to provide a potential move to the downside to complete this W formation at this previous resistance turn support. So how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal for the market to complete this W formation at the neckline, which is this previous resistance turn support. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that from here you have the possibility to gain lifetime access to the mentorship program, gaining automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.